Welcome to another episode of Around the Grounds with the Property Baron. It's the 24th of April, 2026. Is that day tomorrow? I'm Jason Barron. Each week, I'm joined by Nick Meredith, our man on the ground in Brisbane, and Hugo Fonseca, who leads the Property Baron Invest. This is where we catch up, share what we're seeing around the grounds in Brisbane, the Sunshine Coast and Noosa, and also what's happening in the investment space out there. No headlines, no hype, just real conversations, real insights, and what's actually happening on the ground out there in the property market right now. So let's go around the grounds. Good morning, Hugo and Nick.
Morning, James. Morning, Hugo. How are you guys?
Very well. How are you?
Yeah, good. Feels a bit funny at the moment. I feel like we're going from short week to short week and just sort of bouncing around and not getting the routine going, but that's all right. No real estate on Saturday, so I guess we're out and about this Sunday having a look at a few places.
Yeah, that's right. Day off tomorrow. I hope we're all going to the dawn service.
We will. Out where I live in Sanford, they do a really good one. There's an avenue of honour that they for all the fallen soldiers. No, it's really well done. So we'll probably pop along for sure.
Yeah, we'll be heading out with the kids to Tawantin. That's where the dawn service is at Noosa. We go there every year. What about you, Hugo?
Heading out to Gosford here on the Central Coast. So, yeah, taking the kids down as well. Should be good.
Very good. I noticed the price of diesel's come down a bit this week.
Oh, bargains. Bargains galore, mate. $2.70, $2.80. It's like everything's on sale.
It's come down and you haven't heard anything about it. It's amazing. It's like when it went up, that's all you heard about. Now it's come down, it's crickets.
Good news doesn't sell, mate.
No, it doesn't,
it doesn't.
Yeah, you're right.
Yeah. What is interesting is things haven't really changed in the Strait of Hormuz, right? It's still closed, but prices are coming down. So makes you wonder whether they should have gone up as quickly and as soon as they did after it all kicked off.
It's all very interesting, isn't it, Hugo? I think it was you that was saying the other day that only 20% of our oil comes from that region.
Apparently 20% of the world's oil, comes from there.
Very interesting. Watch this space.
Yeah.
So what are we seeing out there at the moment, Hugo, in the investment side of things?
Look, there's been a couple of actually fascinating reports and some data that's come out that I thought was interesting for us to discuss. I don't know if you saw it. There was an article in a report that Catality put together around the impact of the 5% deposit scheme, so the first homeowner scheme that was rolled out on the 1st of October, or the changes to it were rolled out with different caps and eligibility rules, etc. And no surprise, but it's good to see the data actually backing it up. The house prices below the caps for that scheme went up by almost double the prices of the houses above those caps across all the capital cities, right? So we're talking about 6.7% growth on average across eligible properties versus 3.6%. So it was touted and brought out as an affordability scheme. And I think it achieved its goal in terms of getting more people into the real estate and into buying their first home, which is definitely positive. But it hasn't made things more affordable because it had the impact at the most affordable end of the market, which has now become unaffordable, right? So, yeah, it was really interesting.
Well, it was never going to make the market more affordable, was it, in that entry-level stuff? It was always going to go up from there?
Yes, no,
that's right.
It's not really a surprise, is it? I mean, we saw it on the ground basically the weekend after it happened. Just the amount of people that all of a sudden surged into the market. It was pretty clear was it the first week in October, I think it was, when it all changed, that exactly what it was going to do. It wasn't any great surprise.
Yeah. It's, if you look at, there's an actual graph that came out that Cataly put out. It actually, the divergence between properties below the cap and above the cap split, and you could see the change in growth from the 24th of August, literally, which was when the government actually announced it. So it actually started beforehand, because obviously a lot of investors were already preempting that prices were going to go up when the additional demand came in. So they were already getting into the market before that happened and artificially already inflating those house prices below the cap. So, well, it'd be interesting to see what happens and what the government does with it, whether they continue to just increase the caps over time to continue to allow first homeowners to be able to afford it or not. I saw also, just as an example, right, in Perth, only about 11% of suburbs still sit under the house price cap for that scheme. So 90% of the suburbs in Perth, you can't buy as a first homeowner anymore because it's above the cap. So what do you do there?
There's lots of other things happening out there at the moment that I'm reading about last sort of week or so. Construction prices seem to keep increasing. It's not getting easier at all for people to bring more housing to the market, which has been the biggest issue on everyone's lips, I guess, in our industry for a long time now, is the lack of supply hitting the market. Construction prices were in the headlines again this week, going up. Some materials 20, 30%, not making it easier. Something I was reading about this week as well, vacancy rates have been tightening again, and rents continuing to increase. So this seems to be something that's been happening for quite some time now. An interesting stat that I read was that households are now spending across the country a record 0.1% of the gross median household income on rent. So that's a third of whatever they're bringing in as a household going on rent. It'll be interesting to see if it gets to a certain point where it just becomes unaffordable and rents stop increasing because they just can't physically or economically afford to spend any more money on it.
Yeah. It'd be interesting also to see. It's not as easy, obviously, for those potentially renting, but whether you see the same that we've seen with buyers of properties when it becomes unaffordable, they start looking elsewhere in terms of other cities or start going further out. But we might see some movement in terms of migration there as well.
Yeah, potentially, for sure. Did you guys see the house prices rose in 70% of Australian suburbs during the first 3 months of the year? Did you see that come out?
I did see that. I was just reflecting on what you guys were saying and about what Hugo was saying about the first home buyers. They might be able to borrow up to $1 million, but there's nothing for them to buy house-wise. They can't get into like 90% of the suburbs in Perth. And what we've seen in Brisbane, particularly over the last couple of years, is unit prices now are outstripping house prices growth-wise. And that's where a lot of these first home buyers now in Brisbane are going. They're looking at units because they can still get a unit in a nice area, 2-bedroom unit for under that $1 million mark, although it is not as easy as it once was. I was just looking as well, there's between 5,500 and 6,000 units been approved or in the planning stage or even construction stage in the inner Brisbane circle at the moment. So that's a lot of units coming to the market. So it'll be just interesting to see how that works. I know like a decade ago we had an oversupply in Brisbane and that sort of slowed things down for a while. Then nothing happened and all of a sudden there was a shortage. There's a real shortage at the moment. So it'll be interesting to see how many of these developments actually do get done at the moment. I know there's a number of developers out there at the moment that they've got their approvals and everything, but they're just putting construction on hold until they can get some surety around construction costs and labour and all the things that issues we're going to have in Brisbane leading up to 2032.
Sounds similar to what has been happening in Sydney in some of those eastern suburbs areas with, I think it was the state government came over the top of the councils and made the approvals process a lot easier for those developments. So all the developers are running and getting the approvals done, but it was just too expensive to build. So a lot of them have been approved, but not yet started the build. Be interesting to see if that's something that starts to happen in Brizzy a little bit, Nick, as well.
Yeah, it will. I agree, Jace. It's like the biggest issue for us at the moment is available stock issue. We've got plenty of clients, but saw Cotality put out another figure the other day that Brisbane's 22% down in actual listings on a 5-year average over the last 3 months. So that's a significant amount of stock that's just sitting there that we that's not actually on the market compared to what normally is. What we are seeing though is a real uptick in off-market opportunities, and to the point where instead of us constantly chasing them, we're getting a lot of agents coming to us now saying, hey, we've got these opportunities. Have you got anyone that is looking in this area? So for us as buyers agents, it's creating some great opportunities for our clients.
22% down is pretty significant.
Yeah, it is. It's a decent number. That just makes a competitive market even more competitive. So look, we know that off-market properties aren't the be-all and end-all, and they're not necessarily priced the way you want them. But at the moment, I think there's the best opportunities we've had in off-market, properties for at least the last couple of years. That I think the last 4 purchases we've made just in Brisbane have been all off-market, just because of that ability to talk to agents. They're trying to move the stock. People don't necessarily want to go to market. They're a bit nervous. And it's given us an opportunity to purchase some really good properties at the right price too.
Do you think with the market changing a little bit, Nick, do you think that those off-market ones where in the past sometimes we get a lot of off-markets that are just way overpriced or no good, or, they come to us and we really have to assess it to figure out whether they're good or not, worth trying to buy for our clients. Do you think with the way the stock levels are so low and the situation at the moment, do you think those off-market opportunities are a bit better quality and more realistically priced?
100%. Without any shadow of doubt, the ones that we've been getting over the last, I'll probably say a month, and it's really started to ramp up, are certainly far more attractive than what we were getting 3 months ago even, or the start of this year. The ones that we're getting now, that where the good agents are giving to us to look at, are competitively priced. They're right where they should be in the market, and there's no really false expectations about what they think they're going to get. I think agents are starting to have some conversations with their vendors and say, hey, listen, this is where it's at. You've got to be realistic if you want to sell it. This is where we think it's priced. And that's what we're seeing in the stuff that's coming through. It's not like, we were looking at some 6 months ago now. So that's not a nice property, but you're kidding at that price. That's certainly changed. It's far more realistic now, which is great. Good opportunities.
There's a couple other things as well that we're seeing related to that. One is we've had a few situations now where the agents are definitely having to have the conversation with the sellers to manage their expectations. But because there's a lot less stock on the market as well, the sellers are struggling and worried whether they'll be able to find something to buy after they sell their existing one. So I had an example just this week where the vendor has agreed to reduce the price by, it'd be about 10%. Roughly, I haven't calculated, but about 10% to try and get it sold even off market, because their only other alternative and what they were looking at doing was to get a bridging loan. Now, I'm not a broker and I don't understand all the ins and outs of it, but all the brokers that I speak to in general, they tend to not be, big fans of bridging loans. Higher interest rates, you're paying for a lot more that you have to during a period where you're trying to bridge between your sale and the purchase of the next property. So it's actually working out better to just discount it a bit and get it sold than to have to go through that process.
For sure. There's probably going to be a little bit more subject to sales as well happening. I know we're getting a few options up on the Sunshine Coast where people are bringing off markets to us because they want to buy something, but they want the certainty around being able to sell their property so they can purchase without doing the bridging finance option or taking that risk on of being left with two properties.
Yeah, we secured one just a couple of weeks ago. That was exactly that. Had a few other offers on the table, but all of them were subject to sale, and ours wasn't. And we ended up being successful because the vendor just didn't want to risk that additional condition and risk on the contract. So, yeah. The other thing as well, Jason, just thinking about it, what I've noticed has been a bit of a shift with our investor clients is there's a lot more talk and wanting to find better yields. Worried about cash flow, high interest rates, etc. So there's a lot of people just chasing yield ahead of everything else. And I think that's, we help manage those expectations as well. And we try and show them the bigger picture and the long-term picture. So I think it's really important for investors to stay focused on what really matters. $100 more a week in rent, for example, if that's what you're chasing right now, let's say that's the difference. That's $5,000 in a year, right? But if you're compromising on the other fundamentals and the potential capital growth over time, it'll cost you more than that $5,000. So it seems like a lot when you're looking at what rental return you might be getting from a property. If it's $100 more, $150 more, add it up over a year and compare that to capital growth. And it is very different. You definitely need to have the right cash flow and make sure that you can afford to be investing in the places that you're investing in. But I don't think it should be the number one factor that drives your decision as to what you purchase.
No, definitely not. And we've spoken about that a bit recently, Hugo. And when you're actually breaking it down and showing the client what the dollar difference is, pretty quick, it sort of paints the picture of what's the best decision. Do we chase the yield and sacrifice, land size and a whole bunch of other capital growth points, or do we focus more on the capital growth points? Maybe sacrifice a little bit of rent yield. I know which way I'd go myself most of the time. Everyone's different. We do have to go for a higher yield, but it depends on the situation, circumstances of each individual client. But certainly a good point to make. And once we start pointing it out and doing the calculations, it becomes pretty clear which one's going to be the best long-term performer when it comes to the investment property.
Yeah, absolutely.
What else is happening in Brisbane, Nick?
We went out to Cracker in Balmoral yesterday. And for those who don't know Balmoral, it's sort of in a suburb on just over the other side of the river, on the south side of the river, near Bulimba, around there. Balmoral's a pretty hilly suburb, and up on top of Balmoral Hill, you have, must be just about the best views in Brisbane from up there, looking back towards the city and the river. It always never ceases to amaze me what architects and builders manage to do on small blocks with old houses. The creativity is great, and they just come up with still a really fun part of the job, seeing amazing properties and how people go about constructing them and fitting them out. Brisbane's got some great properties on the market at the moment, from acreage to riverside to really awesome units. If you're in that prestige market and you're looking, there's a great range of properties available on and off market. Probably off market, there's a stack out there, some really high quality stuff. So it's still, as I said, a really cool part of the job is getting out and seeing some of these properties and how people construct them and live in them. It's fantastic. How's the Sunshine Coast, Jace? Has it changed much?
Yeah, it's definitely changed. The market up here, it's in the lower price point, sort of entry-level properties through Noosa. I say low price point, but, entry level is close to 2 million these days. But through Noosaville, still pretty competitive. We had an open home last weekend, which we knew was going to be competitive because it was entry level. A whole heap of people at the open home, one of the busiest open homes we've been through for a while. So there's a few limited properties coming to market with big interest in the lower price points. A lot of the stuff that's been on the market for a little while is probably not getting as many people through the open homes. The high price point stock probably slowed a little bit. There's probably less coming on, although there's a couple of big Noosa deals that we know about that haven't sort of hit the headlines just yet that happened over the last sort of 6 to 8 weeks. Still a bit of hesitation in the higher price points. People that are out and about looking at homes at the moment seem to be really serious. There's not as many time wasters out, which some agents are finding quite refreshing. And any sellers that bring their house on the market at the moment, they're definitely keen to sell. There's probably not going to be as much of that, hey, let's put our property on for a ridiculously high price and see what happens kind of thing happening as much for the next little while, which would be really refreshing. We've had lots of properties coming on way overpriced in recent months. I've been going through some nice big sort of trophy homes lately for some clients of ours. One in particular, the team got out to in Sunshine Beach in Adams Street. It sold a little while back to one of the prize home companies for 13.2 million, I think it was. Whoever won it is looking to they've just put it back on the market. So that one's come on the market. Very impressive. Local architect designed it. So there's a fair bit happening in the prestige side of things. According to the agent, they've already had a fair bit of interest on that property. If it sold for 13.2 last time, I guess they're going to be wanting more than that this time. We'll see how that goes. But yeah, lots of good off-market stock. Like you both sort of mentioned before, there's a bit of hesitation, people putting their houses on the market with the uncertainty out there at the moment, but we're finding that it's pushing a lot of agents to show us those off-market opportunities a bit more than usual, similar to we probably talked about it last week. But yeah, we're getting a lot of good off-market ones coming to us now. Realistic prices, ready to buy. Some of them, the agents are bringing the properties to us because they have to sell to buy. So hopefully we can sort of leverage off that little situation there and get some good deals done for some of our clients over the next couple of weeks. So we're sitting in a pretty good position at the moment. Just on that too, external factors on the Sunshine Coast probably don't seem to impact us as much as some other markets, just because it's been such a lack of supply for such a long period of time. It's a real lifestyle market, huge demand here. So a little bit of uncertainty in the market slows it down a little bit, but it certainly doesn't sort of push it backwards much at all.
Yeah, interesting times ahead. We've got
Definitely.
a budget coming through, so that'll make a difference.
Yeah, budget in a couple of weeks, isn't it? Early May.
Yeah, 12th of May.
A lot of people watching this space.
Yeah, all you finance nerds out there just waiting to see what sums you can deduct. Hugo, you'll be right into that.
No, I haven't read into it at all. No,
not at all.
We won't watch it. We'll just let Hugo watch it and tell us all the
I'll
detail
just let him watch
afterwards.
it and tell me what I need to know. Just give me the important stuff. That's all I need.
like using me like an AI chatbot or something.
Pretty
Hugo will
much,
be
yeah.
analysing it. Hugo will be analysing it for 3 days.
Oh, look at his dream. It's a rare Saturday off, but it's Sunday this week, but it's all good. Just get out there and get amongst it.
Have a beer for the diggers tomorrow.
Absolutely.
All right. Thanks for listening, everyone. Don't forget to follow the podcast Around the Grounds on Spotify. See you next week.